FTX is the biggest regret of my life. Under an OSCE ruling, our cryptocurrency assets are being transferred into Canada in a bit-by-bit wallet that is owned by a great 100% compliant regulator there. Assets documentation, no blending of accounts. Leverage on the accounts, that's what counts most. And I believe that's the best place to be right now. There are guidelines for exchanges. Exchanges all across the world, including the NYSE and NASDAQ, are already subject to regulation. Why don't we just demand the same regulation on a cryptocurrency exchange and save ourselves the time? Regulators in the US are engaged in a turf war, and we aren't making any progress. However, there will be significant push to reduce this restriction going forward. Let's focus on passing one small piece of legislation at a time. The Stable Clean Transparency Act, which solely considers a stable coin, is the easiest to pass out of all the bills we have. It's not very complicated, but there are a lot of them. Finally, the proposed policy states that each stablecoin created must undergo an audit every 30 days to ensure that each token or unit is backed by a single US dollar that is in reserve or a combination of Treasury bills with a term of less than 12 months, which is exactly how money works. Let's focus on passing one small piece of legislation at a time. The Stable Clean Transparency Act, which solely considers a stablecoin, is the easiest to pass out of all the bills we have. It's not very complicated, but there are a lot of them. Therefore, in the end, the proposed regulation states that any stablecoin released would need to undergo an audit every 30 days to confirm that each token or unit was backed by a single US dollar if it wanted to be regulated, which is what you would want presently that you had on hand, or a combination of Treasury bills with a maturity of less than 12 months, which is not really complex because that is exactly how the money markets operate. That would result in a stablecoin that would allow both sides to agree. The world's standard payment procedure. For oil and other commodities, we use it. Why wouldn't we want to employ it in this situation? Therefore, in my opinion, compelling it will give you a regular level judgment. If you want to think of it that way, should that be governed by the Treasury, which controls the currency, or should it be handled by the SEC or another lawmaker who oversees payment methods like credit cards, etc.? Or do the states have any say in it? Therefore, these problems need to be fixed. But if lawmakers on both sides of the aisle put their minds to it, you'd think they could figure it out and pass just that one bill that would really be beneficial before moving on to the many digital commodity acts that deal with Bitcoin and other tokens. Many individuals now understand that because digital tokens and currencies are so interconnected and interdependent, you may gain exposure to them by holding just 4 or 5 separate positions. If you desire exposure to Bitcoin, you can do it by holding positions in the cryptocurrency itself, possibly along with some Ethereum or Polygon. If you desire a level 1 on top of the Ethereum payment systems, and possibly one additional, you don't need to hold 20 places. The focus will be on the locations and contents of the current storage facilities for these assets. Certainly, 32 is no longer necessary. Although we will drastically cut back, we will maintain our position. However, as we bring everything up into Canada, we're really calling across the portfolio. The China wildcard, however, has always been a wildcard, and the main topic is the China shutdowns. Finally, the populace has had enough. In the meantime, that does put risk on the market in a variety of ways, and that is something that we all have to cope with. Therefore, I believe that while this issue is being resolved, we will likely trade inside a band of 50 basis points while keeping an eye on the Federal Reserve. There is a lot of back and forth on this, so I'm being very careful in the market and investing more in high-quality firms that pay dividends and whose vibe is still positive. It's getting so monotonous right now that you almost want to scream. You want to be in large cap, S&P, and unique circumstances where private equity is effective. But compared to a year ago, it takes a lot more labor. Nothing can just be purchased. Expect it to increase. Metastatic slaughter has occurred in the media stocks. That calamity that happened there. Many pieces of technology are actually being examined for fee compression, so it's not simple. Working a lot right now. We have these debates every day and have money to invest. Even though it's really difficult, we will remain in a trading range. This Black Friday, consumers spent a record $9.12 billion. Online purchases on Black Friday increased 2.3% over the previous year. Why? Although you're talking about a substantial amount of revenue, you're not taking into account all of the promotions that are taking place in the midst of the income statement. It takes a lot of promotions, sales, and inventory tweaking to move inventory, which is why I'm worried and caution against getting too excited about these record numbers. It's possible that all of the promotion activity resulted in squeezed margins, which will be evident when you look at retail in the long run. They won't be as healthy as they were during the pandemic, in my opinion, due to the volume of promotion that took place. Remember, we still have 3 more days of sales. A challenge is also present for some inventory items. The supply chain problems related to technology and semiconductors will undoubtedly continue to put pressure on a number of things, including the possibility that some items ordered today may not arrive as scheduled. However, we haven't really seen the margins yet. In addition, accruing credit card debt results in exorbitant usury rates of 18 to 21%, which cost a lot of money. It's quite difficult to pay back that principal if you're paying above 18% interest, so don't let any of these ideas or arrangements take advantage of you. So there you go, a free market. There is a way to do this. Despite the numerous innovations and payment methods, they all adhere to the same maxim: don't spend money you don't have. Therefore, we can actually deprive you of interest in the future. Could the Fed be putting pressure on the situation to balance the labor market? What do you anticipate Powell to deliver? Despite doing 50 bips, he will charge his hawkish stance. He simply lacks knowledge or understanding regarding what is happening at this time. The hardest job in the world is his to do. He is despised by everyone for a variety of reasons, but in addition to deciding how much pressure to apply to the local economy, he also needs to monitor the situation in China. Additionally, he lacks the necessary signals at this time. Inflation is still present throughout a wide range of industries. Therefore, it is evident that you need to consider wages, food, and energy. And we're still residing in this peculiar state of nearly full employment. Really, it hasn't slowed down. Real estate makes up a sizable portion of my portfolio, so that's the one element I would, consider. Not in rentals, but in housing, we are already in a bear market. A true current read on housing is one of the things that this CPI number excludes. It takes another 6 months for the backdated number to appear. What I believe is truly happening in Miami, a market that I am familiar with, is that the rate of growth in housing purchasing has slowed and leveled. Finally, the time spent in the vicinity of the market is growing. The rental market, however, is still untapped. It is quite difficult to rent anything here because it is so intensely hot. And rentals have increased since last year, and so it goes on. Therefore, the caution resulting from the biasing itself may be that it's really difficult to find accommodation here on a rental basis. But to me, that could be an opportunity. I suppose I'll rent and see if there's a correlation. I'm looking at residential properties right now in order to start making the traditional stickball bids and purchasing portfolios of homes at prices that are significantly lower than they were even 6 months ago. One of those is what I have this morning. 2 developers came up to me and pitched an idea. I enjoyed it. We'll likely take action there. Therefore, even when the market is declining, there are still opportunities to make an investment. I'm constantly looking for those opportunities at fair prices. Any portfolio should have 5% of its assets allocated to gold. You can steer your bullion either for free or for a fee using the GLD. I carry out both. However, it occurs to me, and I have to be honest with you, I believe the destruction that will occur to digital currencies in the coming weeks will be a buying opportunity. And I'll undoubtedly purchase some Bitcoin, Ethereum, and possibly 2 more. The squad was looking at them because every time one of these athletes declares bankruptcy, isn't that what they were doing this morning? You have to consider it from 2 angles, because these people always go bankrupt due to leverage. You're getting rid of idiot management from the market. They are incapable of managing leverage, you'll discover. When you look more closely at what occurred, I don't care who the player is. They made a big excuse using leverage because they had no prior exposure to this level of volatility. They won't ever receive financing again. That's good too. They are eliminated from the market. Therefore, the quality of the teams who are left keeps improving every week, which is why in the early inning of a startup sector like this, you have to consider long term. I still believe in the potential of cryptocurrencies and other forms of payment like stablecoins. In 10 years, it will be the S&P's 12th sector, in my opinion. Between now and then, there will be opportunity and turbulence. As a result, I don't think I'll be able to catch the bottom, but I have to admit that Bitcoin is starting to seem really interesting. Therefore, I'm just going to keep continuing and will probably start filling in certain roles in the next weeks. There is a lot of selling of tax losses on at the moment. You must make the effort this year. You're going to advise people to bet on catastrophe cryptocurrency then. Thank you very much for watching this video. Please share your thoughts in the comment section.